I'm very excited to be here, and I'm hoping this morning we're going to have a robust and informative discussion about some of the principles of responsible investing in Asia. If I can just invite the panelists to start making their way up onto stage, that would be great, and we can get some introductions out of the way. My name is Katrina Nicholas. I am an editor at Bloomberg on the Gadfly team, which is a team of fast commentary globally. We write opinion pieces on a range of different topics: corporate M&A, bond transactions, market swings and roundabouts, and it's been going for about a year now. But enough about me. If the panelists can please join me. And I think you've got a lot of information about them already in your handout, but let me just do a brief introduction. Here is fine. To introduce first, we have Kerrie Waring. Kerrie is the Chief Executive Officer of the ICGN, the International Corporate Governance Network. As head of that organisation, she is responsible for implementing corporate governance practices across 50 member nations, and she joins us all the way from London. Welcome. To her left is Kevin Gibson. Kevin is the Chief Investment Officer of Eastspring Investments, which some of you might know is Prudential's Asian assets management arm with more than 140 billion in assets under management. And next we have Lian Yeo. Lian Sim is currently the special advisor to the SGX after spending more than 10 years, I believe, as the SGX's or the exchange's head of regulation and risk management practices. And Lian Sim has a long history also with the Monetary Authority of Singapore, and also was seconded to Temasek in that time. So wealth of knowledge there. And next along we have Boon Hwee. Boon Hwee is the Chief Executive of Stewardship Asia. Stewardship Asia is a Singapore-based thought leadership centre that works with companies and institutions around the region on developing stewardship codes and best practices when it comes to corporate governance. Before establishing Stewardship Asia, Boon Hwee spent a number of years with Singapore Power as their Chief Operating Officer and was also a Managing Director at Temasek. And last but not least, we have Pierre Veyres. Pierre is BNP's Regional Head of Southeast Asia and also Chief Executive of BNP Paribas in Singapore. Number of years with the bank in many senior positions, including the Global Head of Transaction Banking based in Singapore now, but has also spent time in New York and France. So introductions out of the way, let's jump right in. Fiona has talked a little bit about the report, and perhaps being in Singapore, we can start here in Singapore. One of the things I noticed yesterday, it was announced that the SGX has joined the United Nations Sustainability Stock Exchange Program, and I think it was also in the report I was reading that companies now in Singapore, as of 2017, correct me if I'm wrong, Lian Sim, have to, on an annual basis, report what they're doing in terms of sustainability. So I'm curious to hear a little bit more about what sort of role exchanges play in implementing and ensuring companies have best ESG practices.
Yes, thank you very much. For exchanges, we're close to the listed companies, and so we at SGX we now have rules and we have a guide on sustainability disclosure. So ESG has to be disclosed annually, and we believe that this is necessary because it gives a better picture of what the company views as its long-term risks and opportunities. And to us, this view on what's happening in the future and a reflection of the quality of management is what every investor would like to know, not just the sustainability investors, and responsible ones, but actually every investor. So it's with some confidence, if you like, or faith and trust, that we bring out our rules and our guide. We also have, like other exchanges in Asia, we also have indexes, and these provide benchmarks and product for investment that you can build on. So in a way, we've secured the start of the information value chain, providing this platform for disclosure and transparency. And that goes all the way out to fund managers and to asset owners. So for the people in this room, you're at the other end of that value chain. And I'd like to put it to you that you can see I'm doing my job. How about you? You know, your views are important to the company so that they report what's relevant and what's important to you. And let me give you an example. As an exchange writing a guide, I'm in a way interpreting what I think investors want to know and need to know. So we thought at first, some 15 months ago, that we would survey investors and survey issuers. So we asked the issuers, what do you think is the most important thing that investors want you to disclose? And they said, labor practices, occupational health and safety. Do you think they're right? Well, let me tell you what the answer was when we asked the investors. Investors said, supply chain, number 1. Number 2, water. And number 3, climate. So we understand now, having attended a session, that water can stop you dead in your tracks, whereas climate takes some time. And anti-corruption, also there on the list. Were these things on the issuers list? Yes, but further down, much further down. So what it told us was that if companies can not get it right, then we as an exchange are in no position to specify what they must report, but we should give them principles and guide so that they can decide what's material and have this conversation with investors so as to fulfill the needs of the market. And that's what we've been doing. So if I've got it wrong, please can you come tell me, otherwise I will continue to get it wrong. And in this, there's another point. We also found out from our survey that many of you get your information from third-party information providers. So you don't actually speak to the company. No wonder companies tell us, nobody asked me. Investors don't want to know. Who says investors want all this information that you are making me tell them? So I think there's a role in communication and in communicating directly. So it could be that you use, say, outsourced fund manager. And so I'd like to ask you how you hold that outsourced fund manager accountable for the sustainability input into your risk profile and your returns, and whether or not communication is part of that.
Actually, if I can just jump in, Lian, you touched on fund managers, so perhaps, Kevin, you can just jump in there.
You saw me.
Yes, exactly, I saw you. I saw you.
Sorry.
I absolutely agree. And there's a danger of being, can you hear me? No. Hello? Is that better? Okay, right, okay. Yeah, I think there's a danger of being too prescriptive in the disclosure requirements. I absolutely agree with you, because ultimately become a list and it'll become a box-ticking exercise. I think it's absolutely right that you know, certain ESG issues are relevant for different businesses, and certainly should be more targeted along those lines. I absolutely agree with that. Because I think the reality is at the moment, certainly in Asia, it is a box-ticking exercise. And I feel that a lot of the corporates are going through the motions. And certainly as an investor, it's our responsibility to escalate that and get disclosure more relevant and more useful.
And Boon, Hwee, I mean, some of the biggest asset managers in Asia are the pension funds. I know you've spent some time, the sovereign wealth funds as well. I know you've spent some time at Temasek. What sort of a role do you feel sovereign wealth funds can play in making sure that companies have ESG at the topmost of their minds?
Well, first of all, good morning. Morning. Yep. Morning, I'm glad to be here. Katrina, before I move on to your question, if I may just build on what Lian Sim as well as what Kelvin has said, I just wanted to jump in to share a certain perspective on that. And that is, I'm very glad to be here where in this room, as what Lian Sim said, we are very much a community that is discussing, having this focus on responsible investment. But indeed, the issue very often is much wider than that, because it takes both the portfolio company sides, if you take the whole value chain, and also the value chain on the investment side. So it is good that we are now having this discussion, whether this forum or many forums that I have the privilege of participating, that the conversation is coming together. But one point that I thought I wanted to just jump in and reinforce is this point that what Kelvin mentioned about. I think very often when we talk about whether it's stewardship code, whether it's corporate governance code and aspects like this, there is an aspect that that perhaps we can go too much onto the side of box ticking, compliance. And if you look at the preceding session, Mr. David Blood's session, of the questions that were from the floor, I would say majority were much on the aspects of the spirit, the implementation in terms rather than the rules that Lian Sim was alluding to. So I think this conversation that we're going to have in whatever part of it, whether it's sovereign wealth fund, portfolio company, asset owner, asset managers, all the way to the ultimate saver, I think there's a need to realize that these two go together, because if you become too prescriptive, as what Kelvin was alluding to, then all the good work may not be able to reach out to the intent, the mindset change that we're talking about. Now, on your point about I would say sovereign wealth fund in general, I think there are a lot of attention on this group of institutional investors over the last 10 years. And indeed, they are an important group of institutional investors. They are not the biggest group among the institutional investors, but because they are growing so fast, and also they have a certain effect of bringing up almost as I suppose a demonstration effect to see whether are they going along with this line of sustainable investment, or in our words, stewardship. They are all in the same space, same landscape. And I would say over the last 10 years, I would say a lot of progress has been done in that, and a lot more studies has been in that area of sovereign wealth fund, such that they are beginning to be more differentiating understanding of this very large bucket of institutional investors. And indeed, there are many that are already in this area of stewardship, sustainable investment, responsible investment. I suppose responsible investment is a good word, it's a wider word. And again, back to this aspect about the spirit and rules, I think both go hand in hand. But if you really look at the way some of the sovereign wealth funds are beginning to integrate into their report, and the way they are looking out for partners in investment, I think there are a lot is already happening.
And so Fiona was saying that the report canvassed these 6 markets and some very good findings, but still a long way to go. And I suppose, Kerrie, you bring perhaps a little bit of an international flavour. I know that ICGN just had the conference yesterday. I think it was your annual conference in Kuala Lumpur.
That's next year.
Next year, okay.
So please join us.
A year ahead. I mean, how would you say Asia is tracking?
Well, firstly, let me just congratulate the PRI on a really, really impressive annual report. I mean, it really goes to show how vitally important the PRI is in promoting responsible investment and sustainable development. So really, it's fantastic. And do read the report. It sets the scene perfectly. The report that Fiona has just launched is perfect for this conference, setting the scene for the next few days. I actually think that Asia is ahead of the curve in terms of stewardship code adoption. we've got codes in Japan. We'll hear from Mizuro-san on the next panel. Malaysia, Hong Kong, Taiwan. We'll hear from developments from Mr. Ong about Singapore. They're being developed in Korea and Thailand as we speak. So there is no other region in the world developing as many stewardship codes as there are in Asia. So that's the first point. The other point to make is I think we can probably learn an awful lot from our colleagues here in Asia in terms of how to conduct stewardship effectively in companies where there's a controlling or dominant shareholder. So if you think about the last decade, listings have really moved from developed to emerging markets where controlling ownership models of companies is the dominant form of listed companies in the world now. And yet our governance and stewardship models are still focused on broadly held companies. And I really think we have to give more attention to the role of dominant owners and their obligations to minorities.
Fully agree.
So much great work is taking place in Asia, and I think there's a lot we can learn. I was in KL on Monday at the launch of a new report by the Institutional Investor Council, Investor Stewardship and Future Key Priorities. Rita Benoy-Bushon, who wrote this, and the team should be here. But the point about Malaysia is I actually think they're hugely progressive in terms of stewardship. Khazanah, the Sovereign Wealth Fund, agreed to sign up on Monday to the Stewardship Code. Once the Stewardship Code is in place and you have the Pension Trust, which is KWAP, as the champion, much the same that you have GPIF in Japan, you need that champion, as Fiona was saying. If you get that champion, the peer pressure will just really help promote change and encourage stewardship to be adopted. So lots of good things happening and lots we can learn, I think.
I'm also interested to explore this issue of how much capital needs to be raised to meet these sorts of requirements. I think it was David who touched on that in his opening remarks. And I think I read a figure the other day that 7.7 trillion between 2014 and 2015 was needed just in Asia alone to meet the renewable energy and sustainability requirements so that we have the limits on global warming. Pierre, you work with a lot of companies, obviously financing structures, and I know BNP is very big when it comes to project finance. What sort of awareness are you seeing from a company's point of view about the structures that are available to them?
I think if we look at the space energy infrastructure with an impact in terms of low carbon, the reality is that things are moving in the region. But there are some aspects which are important to take into account, such as on one side we have investors who are looking for deployment of long-term money, and there is a lot of appetite. Investors are looking for yields, and that's a challenge, by the way, nowadays. On the other hand, the structure of the markets, the legal frameworks are in a way not facilitating all the time. And the third component, maybe just to add to this, if you work on a 50 megawatts solar plant, it's basically the same amount of work as a 800 megawatts coal-fired plant, more or less. So then, if you're an investor, if you're a bank, considering the legal framework, which is not always totally clear in terms of taking, in terms of stability over time, so it means this market has changed. It has become a real business, which is a good news for all of us. In the meantime, all things being equal, it remains a tiny part of what we see in the infrastructure or energy space, for instance. That's the reality today.
I mean, but green bonds 5 years ago almost didn't exist, and I think this year issuance to date has been about 57 billion, and I saw a figure saying it could hit the $100 billion mark. So that's come from a very small market a long way in a relatively short period of time. And China actually now is the world's biggest issuer of green bonds. I'm keen to talk a little bit about China because it's such a big economy and has, I suppose, such a big impact on the rest of the world and what companies consider they're doing about climate change. Just jump in. Is China doing enough in this regard? I mean, are there the policies in place from Beijing and down to meet ESG requirements?
Maybe on green bonds, just a quick word. We see this massive push this year in 16. I think it's by end of June it was 90% up compared to the previous year. And we see the Chinese players, especially banks, being very active. That's one aspect. On the other hand, also, we see a lot of traction with potential borrowers and investors. Another dimension is the fact that if you're an investor, you don't have much incremental yield, actually none, versus conventional bonds. And if you're a borrower, you have to do disclosures. So I think it's coming along. We are on the right track. But I would say it takes a bit of communication, sharing, and a lot of research because it doesn't work for every single company, green bonds, or every single borrower. We have to be mindful of it. Otherwise, it can just defeat the purpose at some point.
How do you deal with the issue, and perhaps Kevin, I'll address this to you, of, we've heard from Beijing about these promised factory closures and shutdowns, and they just don't seem to be happening. I mean, we're still seeing the aluminium capacity has massive oversupply issues. Smelters are just getting fired up, coal's getting dug out of the ground, primarily because it provides jobs, and that also promotes social stability. So from an investment point of view, do you just refuse to invest in these companies, or do you invest in them and agitate for change?
Actually, I was going to follow on a point that Kerrie had made, which actually ties into your question there. Which is the reality of Asia and listed corporations. There are a lot of large shareholders, families or state-owned companies, and China is a good example of that. So in terms of researching companies or the investment universe, we don't screen. So we don't screen in terms of this is uninvestable for corporate governance reasons or ESG reasons or anything like that. Our fiduciary responsibility is to maximize returns across the whole spectrum. So we don't do that. But we try and understand the risks of whether there may be overcapacity, whether there are necessarily kind of national duties type issues, and try and understand what that impacts in terms of sustainable returns. But saying that, it's about 4 or 5 months ago, we had our first engagement with a Chinese company about a connected party transaction. So we wrote a letter to the board. We got an acknowledgement of that, which was interesting. We got a response. And I'll be deluding myself by saying it was because of our intervention that they cancelled the transaction, but they certainly they did. So that for us was a first and an interesting exercise in terms of in China listed companies.
Boon, you've been nodding over there. Your thoughts on China and how you sort of reconcile the fact that we're still seeing major swathes of that economy go full steam ahead with fossil fuels and the like.
On China?
Yeah.
Well, I would dare say that on this distinguished panel, there will be a lot who probably can speak on that. But I suppose my organization has got toward Asia, and China has been part of Asia. Well, I think China, if you look at it from two very big groups of companies, definitely you can't talk about China without talking about the state-owned, the SASAC. SASAC is the state-holding company, of course, SASAC Central and many provincial as well as many layers of SASAC. And many of the top companies in SASAC Central are actually indeed the top companies in the world, Fortune 500s, top ranking. So that is a very large group. And if you would like to reach the Chinese business landscape in terms of whether it's sustainability, responsible investment, stewardship, governance, that is definitely one area that you need to talk about. But just as dynamic and in fact very complex, not structured, is this whole group of non-government. And they are growing so fast, as you can see, many of these companies, whether they are listed, and some are first generation family-based business.
And we're seeing shareholder activism in these companies for the first time now.
So they are not homogeneous in themselves, right? So if you want to talk about as a general trend, I think definitely if you look at it over the last 10 years, corporate governance, I think they are all, this is a totally connected world. Corporate governance rules, especially after the Asian financial crisis and after financial crisis of 2008, has been quite universally applied. And a lot of Chinese companies, whether it's on state-owned or private, are following those rules. One of the points that I wanted to sort of add in this, and they are progressing, the point about how to reach them positively, how to build on what has been the progress on. Of course, there are many areas that, whether it's a sustainable investment and so on, there are rooms to improve, and as I said, they're not homogeneous. You can pick very good examples, you can pick examples that are not. But I think one of these aspects that I really wanted to put in is that if we look at, and I would like to link back to the point that Kerrie mentioned, and also the point about the dispersal of ownership, as well as the point about dominant ownership, and linking it back to Asian, whether it's China or Asian culture, many of the countries actually have got certain strengths about them. But along the way, in the effort, in the strive towards trying to tick the box, follow rules, compliance, it unwittingly may actually cause a dilution of strength. And one of these may very well be a wrong view or misperception, or maybe even it's a right view, but along the way throwing out the baby with the bathwater with regard to the large share owners. If you have a enlightened dominant shareholders, whether it's called anchor shareholders, actually sometimes that can allow the companies, in the true sense of the governance and sustainable development, sustainable investment, to look at things on the long term. If I may say this, there are three things that really we need to tackle in responsible investment. One is the dispersal of share or the lack of ownership mentality, whether it's fiduciary duty link or trusteeship on the board side. The second, very much it is indirect and very much a long value chain. And the third will be this aspect of long-term and short-term. You need both. So again, I would like to just reinforce Kerrie's point about the fact that if you can bring the message, and in this regard, I'm referring to China, whether it's in the private side or the dominant shareholders, and if it's enlightened dominant shareholders in this responsible investment, it will go a long way. And let the two go hand in hand, not to sort of dilute or unwittingly erode the strength where they are already strong, whether it's in Korea or Japan or any of the countries that we will be talking about.
This balance between long and short-term visions, perhaps Lian, you could jump in and share your views, but we're seeing more and more companies in Asia head to the public markets. I think in China alone there's a backlog of sort of 700 companies these days waiting to IPO, and some have gone to the US markets as well. Of course, when you become a listed company, it seems from my point of view, being a journalist, that suddenly you're judged on your quarterly performance, and everything becomes about meeting the numbers for the next quarter, which I suppose is a very short-term way of thinking, and perhaps doesn't gel entirely with the longer-term principles of ESG. So, can or do exchanges have any role to play in that, in helping investors realise that this is a longer-term position that they need to be taking?
It's how you maintain the trouble is we want too many things at the same time. So the quarterly reporting gives you transparency, it gives you a continuous view. Sometimes the law will supply that by saying that you have to have a continuous disclosure, but it's a long way before you get to the law. So just look at the immediate, it's the rules or the exchange, and it says quarterly reporting because of transparency. On the other hand, we want people not to act for the short term, but act for the long term. So now we say sustainable. And so I think that we have to balance this, and we somehow have to get the mindset around this, that the transparency must be continuous, but the aim is long-term. And if you ask an entrepreneur, which entrepreneur doesn't look long-term? He wants to sustain his company forever. They do understand this because there was a listed company at listing congratulated the gentleman, and he told me in Mandarin, don't worry, my company will last forever. He knows what we're interested in, and he also knows what the ultimate game is. So I think it's a messaging.
Yeah, I agree. I mean, I think that one of the worst things they've introduced was quarterly earnings. I think the easiest thing is to ban them. So, yeah, I mean, the reality is, and it's going back to David's point about license to operate, I think as an industry, we're becoming increasingly short-term focused, whether they beat or met or exceeded or missed the numbers. That tells you gives you no understanding of the value of the business. And it no doubt, makes executives focus on beating the number at the risk of the short term. So certainly us at Eastspring, we're very much focused on the long term, on the sustainable returns a business can generate. And this is where ESG for us is so important, because certainly poor ESG policies has an impact on the sustainable returns of a business. So we spend a lot of time trying to understand that impact and how that impacts on valuations. And secondly, then to engage with companies in terms to improve that, which will then improve valuations that improve returns for our clients.
Mm. And Kerrie, do you also find this sort of short-term mentality a barrier when it comes to corporate governance principles?
Well, it's reminding me of I was on a panel on Monday in Kuala Lumpur, and one of the co-panelists, she was head of ESG, and she was talking about a kind of fight that she'd had with the PMs over an investment they wanted to make in the short term, but she was considering the long-term implications of this company. And lo and behold, it was a large European car manufacturing company, and so she was vindicated. So I don't necessarily think that the short term loses out ultimately always at the long term. It's not always at the expense of the long term. It's about making acute business decisions. And there's some occasions, another panelist had commented, the chap from Pension Trust, KWAP, it said, well, actually, there are opportunities at the time where it is right to take short-term decisions for some companies. So it's about being a businessman and making good business calls at the right time.
And I think it comes from not just asset managers, but also banks as well. I mean, at the moment, we still have banks in Singapore that are funding the palm oil industry. So does anyone have any advice or comments on how you deal with that?
I think you speak to my 10-year-old daughter about that. She's very strong opinions. But yeah, I mean, it's back to the, what does that mean to returns to that business? And if it's an unsustainable business, then clearly the returns will be compromised. So it's a very wishy-washy answer, I know, but
yeah.
We don't take any moral stance around that.
Yeah.
Are you asking me because in my country there is a tax on this
You're doing Hillary.
paste, which is incorporating a lot of palm oil? Now the thing is, I think versus regulatory push, which is something you were discussing a second ago, I think a lot has to come from the stakeholders. And when I look at ourselves, we came up with a vision many years ago. We tried to articulate it. We tried to put a framework, which is essential, and with long-term objectives, which is your point. Then for sure, if you have regulatory push, it can go in the same direction, obviously. But I would say stakeholders have to embrace the topic. Otherwise, then you can end up in a situation where people tick the box, which is not healthy. So I think the vision, the strategy, the framework, which is not easy because what we have learned in the last many years is that it takes a lot of tenacity. It's not always easy to stick to your ambition in terms of long-term objectives, energy, infrastructure, ESG in general. It's not easy. But the moment you have the will, it's much better than probably any other external push, such as regulatory, probably.
Perhaps at this stage, if I can open up to the floor for questions. I think we've got a couple of roving mics around, so don't be shy. I can see a couple at this table here. There's a microphone just coming to you now.
Hi, thank you. Emma Hunt from Hermes EOS. Lian Singyo, you highlighted, I think very powerfully, that talking to companies directly about risks and opportunities is necessary. Dialogue with companies is a resource-intensive activity, we know, because within our little organization, we spend a long time doing it. We also know that bringing together like-minded investors, be they asset owners or asset managers, is a very powerful, efficient and effective way of having that dialogue. What is your view, anybody on the panel, about the appetite for collaboration for investors, be they asset
managers
or asset owners, in this way?
I could take that.
Yes.
Yes, so to answer your question succinctly, yes, we agree with that, and we do that. So going back to my original point around that Chinese company, we wrote a letter and we asked other shareholders to be signatories to that letter. From memory, 6 or 7 other institutions signed the letter as well. So yes, I think it's a powerful thing. Although I would say that it is something that's between us as shareholders and the company. I don't think it's right for us to be going out on the pulpit lambasting them, because ultimately it's a collaborative dialogue, and to kind of name and shame, I don't think really achieves anything.
I think another point there is the degree to which the regulatory framework either encourages or discourages. Even in stewardship codes, I think it's Japan, Mizuno-san,
Japan is, yeah.
You know, explicitly doesn't refer to collective engagement because there's issues around acting in concert, and that is a worldwide issue that we need to address. Also, there's another point about, and this is why PRI, ICGN are so important, for making friends, for getting to meet other people, because there's differences in approaches in terms of engagement. So if you know, between local investors and global investors, and just that education of the local issues, I think can be really helpful.
May I add to that? My answer to both questions will be yes and yes. I thought that was a very meaningful question from the angle that if you are not engaging the companies, then where do you get your understanding of where this company is going, especially strategically or in relation to sustainable development? But the key lies, I think, in what is the substance of the dialogue between. If you are just looking at, say, what are you declaring from a return perspective, but without a dialogue into some of the things that are relevant, maybe not immediate, as we have been saying that both short terms and long terms are important. You need to engage on both. And the second one, I thought that was a very perceptive, right to the point question. Personally, I felt there has been somewhat a misperception about shareholders having dialogue with other shareholders. And I think that is an extension towards perhaps a misperception about this constitute collusion. This is not the context of collusion. I think there is a place for investors, for shareholders to have a meaningful dialogue with shareholders, other shareholders. And this is what the whole idea of responsible investment, sustainable investment and stewardship codes or stewardship principles are going towards. How are you going to encourage responsible and engaging investors? And the word engaging doesn't mean only engaging between investors on one side and portfolio companies on the other.
I think the objective is not just the engagement and the form it takes. As an exchange, we understand very clearly insider information. But the point is to get the mindset tweaked correctly, it pointed in the right direction, however that is done, and it can't be done unless there's some form of communicating the message, I think. So we can talk about how it can be done, that's another question. But if there is a will to actually get the message across, then that's the start. And then there's capacity building in a sense. We've had conversations in the last 2 days between exchanges and investors and other agencies. And I think everyone would much more prefer capacity building to, say, name and shame, something like that. because that gives you a much more positive and a longer term trajectory. And so spreading that sense of where returns can be found, and you know, investors always looking for that extra bit of that clue, that analysis. So in a sense, having that spread through the Asian market as well will develop this capacity and the data that makes for a bigger sustainability pool in the long term.
We have some other questions. I think there's one right
Hi,
there.
my name is Pramod. I'm from RAM Ratings based in Kuala Lumpur. We are a credit rating agency there. I had a question throughout the panel. It was something I was thinking as you were speaking, and it led from Lian Sim's point on the survey that you did between the investors and the issuers. I'm curious on, is there a difference between institutional investors from developed or advanced markets as opposed to those in emerging markets? Are their priorities different?
From my survey, I couldn't really tell. I'd rather say that there are investors who look at these factors and investors who don't look or don't yet look at these factors. So I think it's not a developing, but I think it's more like what the investor does. And we do see from some of the information in the last few days that it is becoming more mainstream, and that investors are finding it useful to incorporate these elements into their analysis and their investment mandates and operations.
One, actually, I've just on that point as well, I think it was in the report I was reading that was just released, an interesting observation that sometimes asset managers will act differently in the developed markets that they're operating in than they would in their home markets. And I thought that was quite a curious observation. I'm wondering, Kevin, do you think that actually goes on? Is there an element of truth to that?
I'd be surprised. I'm not so sure about that. I mean, to be clear, Eastspring is an Asian asset management business.
Sure.
You know, we primarily invest in Asia, and our clients are primarily Asian. So I don't know if I'm the best place. I find it surprising. One thing I would say is the embracing of RI, which is why we're here, is relatively new, and beyond, to be frank and honest with you, we're relatively new on this journey. We've been doing it for about the last 12, 18 months. So apologies, Fiona, we're not signatories of PRI, but we've worked very closely with Jessica in Hong Kong and her team there along this journey. So we've come a long way, and certainly, certainly embracing ESG and understanding how that is able to make, for us, better investment decisions, which is ultimately what it's all about for us.
Pierre, just perhaps to this gentleman's question about, do developing and developed markets have different priorities? What do you think?
From an investor standpoint, you mean?
Yeah.
I think most of the investors, be it from the Western world or from the emerging world, are paying attention now to these ESG factors. I think it's fair to say that. Then it's more a question of weighting, how much weight they give, and not all in the developed world are focused on that. Just to be, I think David a bit earlier commented on the number of participants from the US coming here to this conference. So I think it's not, there is no one single response. I think it's a question of weighting.
Any other questions from the floor? Oh, I think there's one over there.
Hello. Hi. Anthony Linehan, Somerset Capital. What does the panel think about the decision of the Singapore Stock Exchange to allow dual voting shares, and how that tallies with the aim of promoting responsible investment landscape in Asia?
Dual voting. So the ICGN position is strongly one share, one vote. We believe that differential voting rights can disenfranchise minority owners and entrench power in the hands of management. So we were very engaged with the European Commission, directly giving evidence, Parliament, countless letters, and were successful in managing back Cofferati's proposals to put forward such types of legislation. But I am nervous about this discussion because it is coming back, and Fiona, if you guys are doing anything in this space, we should partner on this particular issue. It's a stalwart governance principle, and we will stand by it.
At this point, I'm so pleased I'm not executive and I'm only an advisor. And I'm not going to defend. I think the decision, it is, first of all, it is already in the law. So it fleshes out what is in the law. Secondly, I believe they have looked at having a balance of safeguard governance, as well as this view that the entrepreneur wants to build his business and take it out longer term, and that if this is not, if this is frustrated, then that may be a deterrent to raising of funds and building capital on the public markets, where there are more safeguards, if you like, and where the public can also participate. I believe that is the objective of this.
Any other questions? I can see a hand over here, and one straight here.
Hello, Marianne Harper-Gow from Baillie Gifford. I'm aware that ESG issues in Asia are definitely rising up the agenda. And as we're asset manager, but I think it's also how asset owners are thinking about these issues and asking their asset managers to incorporate them. So from our perspective, we've got a few, when we're talking to clients and potential clients, there's this idea that there's a passive approach to looking at ESG issues, and that there's a score ascribed to companies, and then our portfolios are being assessed against that score, when actually we are trying to take a more sophisticated approach to thinking about the materiality of these issues and building them into long-term decisions. So I'd be interested in understanding the panel's view on this sort of contradiction between the short-term score and more long-term, sort of hopefully thoughtful approach to thinking about ESG issues.
Yeah, I'm happy to answer that. I mean, as I mentioned earlier, we were relatively new on the RI journey, and certainly one of the barriers internally was this perception of scoring and blacklists and therefore excluding certain parts. We got over that very quickly in terms of incorporating this as implicit. Sorry, ESG for us was always implicit in our decision making. It was never very explicit. And going through this journey has made us this come to the forefront and very one of the key considerations in our investment thesis. So to answer your question, it is very central to it, but ultimately we want to understand the impact on valuation because of it. So there's no sort of idea of we will not invest in that sector for whatever reason.
Hwee, would you like to tackle that as well?
Not so much to add to that, but just to share a view about long-term and short-term. I think there are two myths here. One is that sustainable, responsible investment or stewardship wanted very much investors or companies to look at long-term. But really, indeed, it is a myth to try to do away with short-term. It is here to stay. So as I heard from somebody I respect very much, you cannot put the bottle back the genie back to the bottle, because it is here to stay. So the question is, how do we deal with both short-term and long-term? And this is something that is really quite, it may differ between situation and companies. If you are facing a crisis, you can't renovate the house when it's on fire. You need to put out the fire before you can even renovate the house. But on the other hand, I would say, second myth is this thing about balance. I find it very hard to understand the word balance. I want to have a balance, family, work-life balance. Very often you really need to look at the situation and you need to take action. So one of the good quotation that sort of sat at the back of my mind is this quotation that is, I would say, very relevant to Singapore because it had been said by the pioneer leaders of Singapore and is repeated last week during one of Stewardship Asia Roundtable by the keynote speaker, is act today with tomorrow in mind. It is not to neglect acting today if you need to do something to tackle the short term, but with the implications of the long term in mind. So I think each of these situations will be looked at, but the whole idea about having this dilemma and solving it, a dilemma is a choice between two good things, not between one good and one bad.
Very true. I think we're almost out of time, but we've probably got time for one more very quick question. I think perhaps this lady over here.
Thank you. I'm going to try to roll two questions into one really quickly. So, Lian, thank you for the challenge to improve communications between issuers and investors. It's a bit difficult from a resource perspective to be able to speak to many thousands of companies. So I'm not quite sure how we improve that. I have noticed there's an opportunity, I think, for third-party providers. I've noticed quite a few companies contacting me in advance of a vote on, say, on pay, for example, and being able to set up meetings with the board to discuss. So that's just one issue. And Katrina, you had mentioned basically this concept of, I don't know how to describe it, extended financier responsibility. So banks that are funding palm oil and investors should somehow, I don't know, are we supposed to connect with the banks and talk to them about this? I'm just wondering from both perspectives, from an engagement perspective, I guess, how do we improve what we're doing to have better communication with the issuers?
I'd like to tackle that. We've got a hard stop in about 1 minute 30, so.
So there's two questions there. One was about communication with shareholders, companies.
Yes, I believe so.
And the other one was about palm oil.
Yeah, do you, I
I'm
suppose...
happy to take the first one. I'll pass on the second, if that's all right. No, I disagree with your premise there. I think if we're not engaging, with the companies we're investing in or potentially investing in, I really do believe that's a kind of really forgetting on your fiduciary responsibilities. I really think that would be integral for what you should be doing, and certainly what we do. So I don't see that as a barrier per se.
I think if you're an investor with thousands of companies in your portfolio, it's then when you look to organizations like the PRI and the collaboration platforms that can actually help with that engagement effort. Just quickly on the communication point, I think we need more education around the concept of comply or explain, often considered don't comply and complain. It's kind of, stewardship codes in this sense are the yin to the yang of corporate governance codes, because if the corporate governance code enables companies to disclose any deviations to a code recommendation, the stewardship code places the onus on investors to take considered opinion on that explanation and engage with the company on that. So the comply or explain mechanism, I think we need much more education around that, which will then facilitate the discussion around the disclosures. That's a key part too.
I think so.
Comply or explain. Since I can't explain, I just comply. That is box ticking.
Well, on that note,
Sorry.
we will need to wrap things up. So please join me in welcoming all the panelists here up on stage with me this morning.
Thank you.